Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, August the 23rd, 2013. So let me just expand in on the daily chart of the starting out with the Dow futures. And the interesting thing that happened this week, essentially in the stock indices at least, is that we had a pretty ferocious pullback, and it was a pretty deep pullback, and we were talking about some some key support levels. You had the 50% retracement, you had the 61.8% retracement, starting at 15,051, and then all the way down you had this sort of zone here, this entire zone here of the fib retracement, which comprised this zone, and then you had some key support levels at 14,800. So it was really hard to tell where this where the bloodletting would stop, but essentially what happened was we came all the way down to, let me just change the pen here. We came all the way down to 14,800 overnight. I believe it was on Thursday night, and we stopped almost to the tick. I think we stopped like one or two ticks above 14,800, and that sort of put in that key support level. Going back over time, you can see, it was resistance here. It became support here, came down, tested, broke it, tested, held it, and pushed off. So this was a pretty obvious key level going back 14,800, and 14,800 ended up putting at least a short-term floor into the Dow futures for the time being. So you've got a couple of key things going on here. You've got you have the makings of a potential momentum shift here. You can see the slow stochastic has bottomed here and it's crossing over. It needs to get above the 20 to really confirm a momentum shift. So if we do get above 20, I think we closed around almost 15 here. If we can get above 20, then what I would expect is 14,800 to hold in the short term and to get a pushback a little bit higher, maybe into this trend line here. Or into, let's see where some retracements are from this low, or that high rather, to that low. So right around here, 50% retracement would bring you right into, there's the 50% retracement back to the high side, would bring you right into that trend line. So if we were to look at, where the 38.2% retracement comes in, the 38.2 would come in right around 15,100. So it was normal to come down and test 14,800, and then we closed right at close to 15,000 intraday. We tested 15,000 intraday. That's pretty normal and to be expected. No surprises there. The question is, how high are we going to push back to the high side? I think 15,100 to 15,200 in the short term makes a lot of sense. If we actually come back down through 14,800 and we fail 14,800, then I'd be looking for a test of these lows around 14,500. I think would represent the next major support level. So we're looking, a possible test to the high side, just to recap, up to, potentially 15,200. That's another 200 points higher in the short term. If we break 14,800, then we're looking around 300 points lower. That's sort of what I'm looking at, around this key support level of 14,800. So I hope that makes sense. I don't want to overkill the analysis. I think it's pretty straightforward this week. And let's take a look at the S&P futures. S&P futures came all the way down to their 50% retracement of this last move, which was around 1,628-ish, 1,629. A push back to the high side would bring us, potentially into 1,678 or thereabouts, into that trend line and into these previous highs. This is starting to look like a head and shoulders type pattern to me, but it will take time to develop. If you look at from a momentum shift perspective, you can see the momentum is bottomed here and is crossing, above. It's already crossed above its 20 line here. So I would expect, this low around 1629 to hold and to get, a test of higher prices at this point in time, potentially, 1678, which isn't, it's only about 17 points higher. Over and above that, I wouldn't hazard a guess. I wouldn't be surprised if we pushed to new highs, and I wouldn't be surprised if we came down and tested these lows. So we've got to kind of take this on a day-by-day basis. We're in a period of time where in August and the beginning of September where, the markets can get really choppy and there's no real trend or seasonal bias. So I think we have to treat the markets that way on a day-to-day or 1 to 3 days out sort of basis. We've had no real direction from the Fed in terms of tapering, when they're gonna taper, if they're gonna taper. We have no real direction from a news and or Fed policy perspective, and from a seasonal perspective, we have no real bias. So I'm not really, I'm just taking this on a 1 to 3 day, 1 to 5 day out basis. Hope that makes sense. Let's take a look at the wrong symbol. Let's take a look at the NASDAQ. So the NASDAQ held support. The retracement was a lot shallower than the other indices. Let's turn on the 382. And, we didn't even test the 382. We came down to 1347-ish, and we held support there. And then we're set to essentially retest the highs in the NASDAQ back around 3147-ish, somewhere in and around those highs. We closed at 3121. So, I'm looking for potentially, from my perspective, I'm looking for maybe another 22 points of upside potentially in the NASDAQ. And then we'll have to see what happens when we hit those highs. We've already had the momentum shift in the slow stochastic. We closed around 42. So we came below zero. We rolled back up above 20. We came below 20. And then we rolled back up above 20, and we had, the stochastic crossover. So, I'm expecting a little bit more upside there. If we can hold 3047-ish, then that's sort of, I look at the market in terms of jumping levels. I think that's the next level that we would be looking to test on the high side rather than the low side first. Hope that makes sense. Let's take a look at the transports. So the transports broke that minor downtrend line. They did a 50% retracement of their last move. So, essentially, I'd be looking for potentially a retest of 65.65 or 66.76. Just to push back up to the high side. In the same situation here, you're testing the zero line in the MACD, and you had the stochastics sort of bottom out and momentum pushing back up to the high side. So looking at momentum, momentum oversold and crosses, something that I've been paying a little bit more attention to in conjunction with support and resistance. I find it very helpful. Let's take a look at some key currencies. Let's look at the dollar index. Dollar index seems to be holding these lows. That put in a minor higher low here. It's just struggling to get back up above this trend line. I'd be looking for, you've got momentum. Okay, let me be clear here. You've got a sort of positive divergence where you've got price going lower and you've got momentum going higher. So I'd be looking for, this to be a potential bottom in the short term, and I'd be looking for a pushback into 82.50-ish. To me, this market is just, in a huge sideways range. So there's not much to talk about there. The analysis is essentially the same as last week. Let's take a look at the euro. So the euro is at resistance here. Momentum, you're putting in, you've got a negative divergence. So let me change this to red. You've got a negative divergence where price is pushing higher. You're into a key resistance level at about 134.12, and you can see momentum is putting in lower highs here on the slow stochastic, and so you could see a potential pullback. So at this point in time, I think I'm looking for slightly lower euro. If we break above 134.12, then I'd be looking for a potential retest of these highs around 137-ish. So I hope that makes sense. And let's jump over to we had some pretty interesting action in gold this week. I'm actually quite surprised by it. I am looking at, from a seasonal bias or a seasonal perspective, we have potential strength into October. But what I'm surprised with is, in the last one or two videos, we talked about a breakout above this trend line where we had, momentum bottom pushing up to the high side. We're looking for a potential break above this level. We're looking at resistance around $13.80 to $1,400 per ounce. What surprised me though is that we just sort of built this this narrow range here, this narrow box, and then we pushed up to the high side and closed, close to 1,400. We did get above 1,400, but we didn't close at 1,400. We closed around 1395.80. So that was surprising to me because what I was really looking for essentially was I thought we would get another pullback before we pushed higher. I was expecting this sort of a move to pull back into this trend line and then to see if we could break up above that trend line. So I'd be looking for support here, and I'd be looking to break, this trend line here. So the significance of this move really is that this downtrend here, this trend line, I'm actually going to mark this in red just to sort of highlight it. But essentially this downtrend line here represents a pretty major trend change from the major downtrend that we've had, going for a long time. Between that trend line and let me just extend this trend line right and that trend line. So what essentially I'm looking at here is a potential real trend change if we can hold above this red downtrend line and we can get above 1,400. Then what I'd be looking at is a test into 1,479 where these two levels come together and where you've got this congestion zone here, this major resistance. I think if we can stay above 1,400, I think 1,479 is potentially the next key level that we'd be looking to retest. Now, having said that, I don't like where the slow stochastic is in terms of momentum. I think we're really overdone there. But if this market really gets going, gold tends to be a momentum market, and if it could really get going, then this could stay overbought for a long period of time. Now, having said that, to me, what makes more sense, from a risk-reward standpoint, would be to see a pullback into that trend line and then a push into 1,479. So I favor, from a trading perspective, I favor this type of a move, but I recognize that the next major key level, if we can stay above and get above 1380 and then 1400, would be a move into 1479. So I think those are the major levels in play. I think major support is around 1317. So a pullback and holding 1370 would still make sense to me for a push into, potentially, 1480-ish. Okay. So I hope I've been clear on that. Let's take a look at silver. Silver's been really surprising too, pushing above $23.73, pushing that high, pushing above $22 immediately in this area here over the last week and a half, to me was really, really surprising. So I thought we were going to find resistance at 22, sort of like we found resistance at 1380 for a number of days in gold, and I thought we were going to pull back first from 22, but we just powered through that level, and we didn't look back in the silver. So let's take a look at the next levels in play here. Before I move on, the next levels in play here, I think what you really have happening here is we're at some, pretty normal resistance levels coming in here around 24.86, but then essentially I think the major resistance is going to be around 26.49. So $24.87, let's call it, is going to be some significant resistance, and then the next challenge point I think is going to be around $26.49. I don't really know how silver's going to react around those levels. If it can get up there, we're already overdone in the momentum, but the MACD is higher. So, it looks like the metals want to test some higher levels, but they're really extended at this point in time. Let's take a look at copper. Copper here from this high to this low. You've got some resistance at, you've still got the same levels in play, 1339 to 1349. We've been talking about that over the last several weeks. I won't spend any more time on it. Let's take a look at the natural gas. So the natural gas is finding resistance around $3.52. We probed above it. Now we're below it. We closed around $3.48.5. 348.5, 348.5. We're overdone in momentum. I think the major move here is done, and at this point in time, I don't really know what natural gas is going to do, so I won't hazard a guess. But as long as we hold 325, we could, pull back, put in a lower high, and then push off into 370. But at this point in time, it's not really that clear to me, so I'll just sort of back off on that analysis. Let's take a look at crude oil. Crude oil is trading in this box here, and as long as we hold support at the bottom of this box, this is basically a Darvis. You've got a Darvis sort of box taking place here. You've got major support around 102.22, major resistance around 108.78. It's sort of in this dead zone here. I'm looking to see if we can get some guidance outside of this range. Let me just extend this trend line forward. If we can get above 108.73, let's say 108.80, then, as I've mentioned in previous videos, I'm still looking for a break of 108.80 and a retest of 110 and more, 115 to the high side, 148.80 or 104.80 rather to 115. So until and if we can get a break out of this dead zone here, that's what I'd be looking at, and I would treat this as a day trading dead zone for the time being. So I hope that makes sense. Let's jump over to I'll jump back to some currencies. I just wanted to look at the USDCAD. So the USDCAD here, I've been talking about in the previous videos. This has really taken a long time to transpire, but what I've really been talking about here was holding some support levels and then pushing back off to the high side. So we came as high as 105.633, probably a couple weeks later than I would have expected. We did have a momentum shift back to the high side. Here we broke out of this triangle. This was a nice triangle pattern. Here when it got choppy, it sort of developed into this triangle here. We built up some energy here. We coiled, and then we broke out above 104, let's call it. We pushed all the way into 105.63. So this is a short-term negative candle here. See this this candle here is sort of a distribution candle where we closed, more than 50% off the highs. And I don't know, I can't tell from this because, Forex is really not good with reporting volume. It's not a centralized market like the futures are. You've got a number of different banks and sort of, I'll call them exchanges, although that's not really accurate. You've got different, pools where these, and banks where these instruments trade. That's one thing I don't like about Forex. I wish they had a real centralized, transparent exchange where transactions took place. But having said that, the price action here is negative off of this high, so I'm expecting a short-term pullback, but I'd like to see us hold 104. That's what I'm sort of expecting, and see if we can get a push into, let's say, close to 108. So that's sort of what I'm looking at, recognizing we have immediate resistance in the background. This pattern has essentially played out, and you've got resistance around the highs and around 105.6 where it's tested. So this move is essentially played out, but I'd like to see if we could get a little bit higher. We're overdone on momentum. MACD's testing the zero line, looking to see if we can, get above there and get some momentum back, to the high side with a pullback first. So I hope that makes sense. This is a nice move. It took a long time to play out. Okay, so I think I beat that one to death. Are there any markets we haven't looked at? We've looked at stock indices, major currencies in terms of the dollar, the dollar basket, the dollar index, and the euro, USDCAD we looked at. I don't really want to look at a lot of other major currencies. I should probably start covering a little bit more of those in these videos, but maybe I'll break those out into a separate video going forward. So I'll think about that. We looked at stock indices, natural gas, crude oil, the metals. I think let's just take a quick look at the 30-year bond. So if we look at the 30-year bond, we broke support, and then we've got the makings of a potential momentum shift here. We're back up above 20 in the slow stochastic. We broke support. Around what is this level? I've got so many things written there. 131. Well, we broke 132, let's call it, and we were back close into 132. So these major lows here we broke down, and now we're back in there. We're starting to lose momentum to the downside and potentially pick up momentum back to the high side. So at this point in time, if we can get back above 132, then I'd be looking for a push back up, into some of these higher levels, maybe around 134. It's really hard to tell. Let's look at the 10-year, see if we can get a better idea. See, the 10-year here looks like it sort of fake. It did the fake and break here, where it pushed a little bit lower below this low around 124.11.5, and it pushed back up to the high side. So this is I think we were talking about this was a really tricky area to be in last week. But if we look at, so here's the 10-year bond, right, or the 10-year note, and it's holding support. And then you look at $TNX.X, which in TradeStation is the yield, the inverse. We broke above some major resistance. So these are basically interest rates, the 10-year. We broke above 2.81. This is represented as let me be clear here. This is represented as 27.45, but it's essentially 2.745. So we broke above that, and it looks like we're coming back down to retest it, and we're overdone on the momentum side. So on the the yield on the note or on the bond has essentially broken above the highs, long-term highs, or intermediate highs, but we're coming back down and testing that. So it's not really clear if the bond should be shorted now, or if they've just pushed back up, or if they're going to push much higher. So I don't have a really clear analysis on this, but I can say I'm being very cautious and very careful and looking to see if which one is going to win out, because normally you would expect as the interest rates were breaking out, you would have expected more of a sell-off in the bonds. So there's sort of a discrepancy here. There's sort of a dichotomy between the bonds and the yield associated on the flip side of that. So I hope that makes sense. I'm being really cautious here, and I'm looking to see if we're going to put in a short-term bottom and push to the high side, or if the yield is ready to take off. But I think we need to give these levels a little bit more time to grind around these levels and resolve themselves. I don't think getting in early really makes a lot of sense here. So I hope that all that analysis makes sense. I'm going to wrap this video. I'm not sure how far we are into this video, but I'm going to wrap this video. Good trading, good investing. Have a fantastic weekend. I'm going to be announcing, some events. There's a couple of major events coming up in September. I'll be announcing those very soon, over the next week or so. So stay tuned for that, and enjoy this weekend. It's going to be fantastic weather, and we'll look forward to seeing you at an upcoming event in September, or at the next video update. So all the best, and good trading and good investing, and be well.